have Mr. Anand Agarwal, who is the CMD at V-Mart, joining us this morning. A very good morning to you, Mr. Agarwal. Thank you so much for joining us on ET Now. And it's been a very good quarter for your company compared to what's been happening due to the COVID-19 impact. Channel checks actually have suggested that inflationary pressures have resulted in weak consumer demand across discretionary and non-discretionary segments. Could you tell us what's the current demand scenario across your business segments also? And also if you could tell us what exactly drove the quarter.
Good morning and thank you. Yes, you're absolutely right. Inflationary pressures are definitely continuing to, remain challenging as far as the ground situation is concerned. What we have seen in the last 2-3 months is definitely post-COVID. There has been a K-graph kind of a recovery where the bigger towns or the rich have become richer and the poor have become poorer. So there is definitely affordability issues in rural and semi-urban areas. Because we have presence in almost all parts of the country. We have presence in tier 1 towns as well as tier 2, tier 3, tier 4 towns. So there's a very clear messaging that we are getting from the customer. Tier 1 customers are definitely buying more. The footfalls are much better in malls. The footfalls are much better in bigger cities as compared to tier 2 and tier 3 towns where the discretionary spend has definitely slowed down. Coming back to the results, I think the numbers that we posted for the first quarter have been quite good. Despite the inflationary pressures, despite the challenges, I think we've done fairly well. Also aided by the fact that the recent acquisition that we did in South India turned out to be quite profitable and above expectations for us. So we are very happy with the results that we have seen in that part of the country. And that comes as a shot in the arm. Going forward, definitely there are pressures, but we continue to look forward to make more improvements in the pricing so that we can attract better footfalls and more customers.
Is that something that Lalit accounted for the move back to profitability? Then price hikes that you've taken, what basically pushed you above the line again?
So I think we've always been profitable. I think only in the last year, because of the COVID pressures and particularly in Q1 last year, which was the second wave of COVID, which literally resulted in almost 80% of the country under lockdown. That resulted in a loss, but otherwise Q1 usually is a very strong quarter, is a good quarter. And also the fact that we had taken some amount of price increase to combat the inflationary pressures also meant that we had better margins to spare and therefore a better bottom line. Also the fact that because for the last 2 years we did not purchase a lot of inventory and therefore the current state of inventory was in very good health. We had to resort to very less discounting, and that also increased the amount of profitability available. But having said that, I think inflationary pressures are there in our P&L as well. So while the gross margins have come out quite well, but our own operating costs have definitely inched upwards because of the the hikes in petrol and manpower cost and other establishment cost as well. But otherwise, I think the margins remain under control and they should remain. We should look forward to higher profitability during the year.
Right. Mr. Agarwal, let's talk about the margins then. We did speak about the price hikes that you've taken, the impact that it had on your operating costs, also how it impacted your gross margins as well. But for the year, what sort of an outlook you have for the margins? Have you penciled in anything for now? No doubt there are inflationary pressures. It won't be fair to quantify for the entire year, but have you penciled in anything for now?
So it's very difficult to predict what the numbers can look like. But what we can definitely what we are looking forward to is the pre-COVID kind of profit margins, which used to average at around 8 to 9% EBITDA. That is something that we can look forward to, especially because that South market is has come out quite well. Definitely there are inflationary pressures, and we have also announced that we will be rolling back some part of the price increase that we had taken in Q1 to accommodate more economical economy set of buyers and tier 2, tier 3 town customers to come and get the value retail offering in a better at a better pricing. So there may be some challenges, but I think we should come back to pre-COVID levels by the end of the year.
Thank you so much for joining in and wish you all the best for the remainder of the financial year. Thanks so much for speaking to us. All right.